this week's training. Merry Christmas, everybody. Hope you had a wonderful time. Just gearing up for the new year, and gotta jump in here real quick and let you guys know about some of the questions that I get. One of them is about lenders. So we're going to go over that today because I think it's super important to know the different avenues of funding your project or funding your projects. What I get asked sometimes is, how do I find a lender for my project? What is the, what are all the different loan types? What are all the, so there's so many questions. I'm just trying to turn over the best ones to give you today. The sad part is it's so big. It's such a big industry. You could literally Google hard money lenders near me, lenders near me. Either way, you're going to get a ton, right? You're going to get a ton. And the reason I say to go Google it, and I'm not giving you a direct person, is because there's thousands, right? And there's so many variables to you, to your state, to your county, to your building, to your to the location of the property. There's so many different variables. You know, each company does something different, and a lot of people don't know all the different things. So I'm going to go over a few things that will help you in this confusion. And of course, ask your questions down below. Let me know you're coming in live, #live or #replay, and let me know you got some value from this as we move forward, because the more you guys give me, the more I give you, right? And if I know you're stuck on something, I'm happy to provide. Everyone's got something that is holding them back. And just recently we were talking about lenders, and I wanted to share that with everyone. Because it is much simpler than it may seem. And why I say that is because once you dial down, it's easier, right? It's when you're looking at this big bucket of how do I even start, or where do I even go, or and some people put the cart before the horse, right? Some people think maybe they need the lender first in order to get the property. And that's not always the case. That's traditional thinking, right? That's what's the word that I want? Not just traditional, but that is owner occupied, right? Someone who's not a non-investor, someone who's not investing. That is typical. If you go visit a realtor, they're going to say, hey, let's get you pre-approved. Go to the lender first, right? They usually go find the lender and say, here, use this one. And why is that? Because the realtor knows the location, the typical lenders, your situation, and what might be best for you already, right? So they could just refer somebody to you. And that's typically someone like a mortgage broker. A mortgage broker has a broad spectrum of products to choose from. It's still retail, but they still have a broad spectrum, more so than the traditional boxes like B of A, Wells Fargo, all of that, right? And the sad part about B of A and Wells Fargo is they just have this small box that you need to fit in. Small box. I think the minimum is 620, and barely anybody gets in on that credit score. They typically want 680, 720. Even doctors are like, how do I even get this loan? I have like a 720 credit score. I make all the money I need, and they still won't give me the loan, right? So they're not always the best answer. So I have a few more I'm going to go over to give you guys some ideas of how to choose the right lender, right? Or is it going to be owner occupied? Are you going to be non-owner occupied? Where is it? Is it in a rural area? Is it in downtown city? Is it there's, again, so many variables, right? What's your credit? What's your experience? A lot goes into the deciding factor of a lender. So I know I kind of probably just opened up a can of worms. So again, send me your questions, put them in the comments. I'm here to get it clarified as much as possible. Okay, so stick with me here. I do have some things I'm going to roll over, what to ask them and how to find them specifically for your projects. But first, let's go over the different types, right? So you have the traditional, which I briefly touched on, Wells Fargo B-Day type. They typically want a 620 credit score or higher. They kind of really prefer 720. And they have very minimal products. Their rates depend on owner occupied, your credit score, the building. Are you going to do no doc or full doc? Actually, I don't even think their traditionals have no doc. I think that's more the some other banks that I know of. Your credit union is another one, right? Credit union is pretty much a similar box, but they have better products. They usually have cheaper rates. So if you have a credit union, go for that, right? But they're actually stringent on investment properties. So some of the clients that join me, just so you know, they're stuck because the bank will only let them have 4 loans. So how does a teacher own 1,000 properties if banks only give 4 loans, 4 to 5 loans? Right? If you're trapped in this box of I can't go any higher because my debt to income ratio is too high, we need to talk, right? You want to listen in on this next little section here. But conventional loans, they typically will refuse any kind of investment property, and that being that it needs repairs. Okay, so they'll lend on stuff that's pretty, so long as you are pretty as a customer, the house is pretty, and neither one of you need any work, they'll lend on it. Which is, 9 times out of 10, not the case. You have something wrong with your credit score, or you have something that they don't like, right? Maybe you have a 600 credit score or lower, right? And maybe the house needs some repairs and they're just going to go, whoop, you don't qualify. Shut the door. Bye-bye. So you're like, crap, I can't buy any investment property because I can't get a loan. Well, now there's hard money loans that you could look into, right? So hard money is the next one. It kind of is, so it started out as a pool of private money lenders got together. And they've institutionalized it, and then it's grown to this kind of monstrous, like a dime a dozen hard money lender companies out there. Each state has countless hard money lenders. Like I can't even count as high as they are. So, so just Google hard money lender near me. And the reason I say that is because it depends on your state. It depends on your county. It depends on you eventually once you get a hold of them. So I'm in Pennsylvania. I had hard money lenders that I worked with in California. They don't lend out here in Pennsylvania. So a lot of lenders are state specific. Some are nationwide and some have 4 or 5 states that they lend in. So you have to figure out which ones those are. That's why I say Google hard money lenders near me, so that you can, it's just going to have pages and pages of lenders. So go ahead and they're just dying to give you money. They have to give you money because if they don't hit a certain goal by the end of the year, they don't get that much to lend the next year. Right? Because they have checks and balances for their business that, keeps them in business or not, according to their lending capacity, right? So you'll see a lot of times by the end of the year, they're like pushing to, I need to lend this money. I need to lend this money. And they'll be more generous towards the end of the year to get that number up, right? So yeah, just Google hard money lenders near me. The best way to do this is to get a potential property. One of my clients has a potential property that she wants to buy. She goes, yeah, I was looking at wholesale, but this particular one I want to keep, right? How do I keep it? And it's getting the right lender on it, right? Having the right resources. so that you can. And this is what we're putting together for her right now. So Googling hard money lenders near you in the state of the property. So I shouldn't say near you, I should say where the property is, right? She's actually in Florida and the property's in South Carolina. So being able to target the actual location of the property, that's where it's going to be lent at. So that's what you should Google, is in that area of the property. So get a property and start dialing, right? Get an Excel spreadsheet that says, you know, the company, the contact, who you spoke to, their number, their email address, everything, and the products that they offer, right? So let me go over a few of them. Like there's flip loans, there's long-term 30-year loans, there's commercial loans, there's residential loans. You can get ones that are 75 to 90% purchase and then 100% rehab. And then there's ones that lend based on your experience. So if you're flipping, you know, 10 loans or 10 properties a month, right? They're practically going to just give you the money, practically, right? If you've only done one flip in 1 year, they're going to go, I'm going to have to add some rate to it because there's a risk factor. If you haven't done anything at all, then they're going, well, the rate's going to be higher because there's a risk factor in you not performing. So what's great about hard money is basically the asset qualifies. Okay, they're going to look at your credit, they're going to say what kind of person you are, your experience and stuff like that, but they also want to know mainly about the asset. Okay, whereas in traditional, it's all about you. It's got to be your credit, your money, your everything. And then yes, the house qualifies. You got to get an appraisal. You got to have everything pretty and done and not need any, you know, rehab to it. Hard money, they're okay with rehab. They're okay with rehab, which is why they do purchase plus rehab loans. Now you can get in a pickle with those if they're very stringent on how you make the draw for the money that you get for the rehab. They don't just go, oh, here's 100 grand, go have fun. You have to earn the draw from each one. So just so you know, it's structured. If you've ever done it or listened to getting a commercial loan or a builder's loan, how a builder's loan is more the one that's equal to. So a builder goes out and they see this plot of land and they want to build, they get a construction loan, right? And they have to prove what they've done, and then they'll get a draw from the bank for the next phase of the property. Not the whole thing, just a phase of the property. And then once they've proven that they've done that part, they've had it inspected, the whole 9 yards. Yes, we completed this part. Then you get another draw from the bank, right? So there's a process to that 100% rehab loan, okay? Just so you know. Again, there's so much to cover, so I hope you're tracking with me. We're going to head into some private money lending and how to find them as well. But just even those two alone, you know, regular, traditional, and hard money lenders, you can cover so much ground just by those two alone, right? I have some clients that have house hacked their home. And you could do the same thing with like a sixplex. You can get a FHA loan and then be owner occupied in one of the units, right? Now, again, this is depending on your state. Some won't do past 5 units, only up to 4. Again, then you get into commercial loans, and I get so lost in the weeds of all the different things because there's not just a basic answer to give you guys. That's why there's not a basic answer. It depends. I feel like an attorney. It depends. So anyways, it's there is where was I at? Commercial loans, right? That is something that you can get as well from hard money and from traditional banking. We're going to get into private money lending here, how to find them and how to make them feel secure in their purchase or their lending capacity, right? So who is a private money lender? What is a private money lender? It's your friends and family. Typically it comes from retirement accounts, right? If you have money sitting in the bank, you're losing money. Right now, I have people contacting me saying, I've lost 25% in the stock market, Joanna, I need to put it into real estate. Help me get it in there. So I have projects that they're putting money into to help them get a better return on investment. And here's the key. The key is they are secured by a deed of trust and it's insured. You can't say that about the stock market. So that's on my single family residence properties, right? Which is 1 to 4 units. Commercial is 5 and up. So I have 38 units where people are in a PPM, and a PPM protects them, right? They are a part of the property. Their money is attached to the property. And a PPM is a private placement memorandum, just FYI. I tend to speak in my acronyms and forget to explain myself. So anyways, there's different ways to protect the money and attach it to the property. And it all goes through escrow, right? So there's different strategies inside of the private money industry. Now rates, I don't think I went over rates in traditional is about, I think we're at like 6. I saw one at 4.75 when I Googled earlier. Still, can you believe it? But it must be an old ad. I didn't talk to him. It must be an old ad. But anyways, 6. You might as well just plan on 7, 8%. It's all going to go up. There's several rate hikes that are coming up, and they're going to be about a half a basis point each. That's what I've seen in the news. That's what I've seen in my updates. Is I got my ear to the market, listening to what's going on. There's still a couple more happening at the end of January. We just had one on the 13th of December. There'll be another rate hike. So just know that it's coming. And this really messes up the BRRRR strategy and flips because they probably didn't plan for that, just so you know. So here's where private money comes in. Private money is negotiable, right? Private money has been as little as, 3%, little as 3%. Probably maxing out at about 10% on private money lending. It just depends on, is it a small amount? You want to give them a bigger return. If it's a larger amount, you probably want a smaller rate because it's just going to be astronomical, right? So typically around 4 or 5% is what I've been doing on private money lending. And then 8 and 9% on some other projects. So it just depends on the project and the term and some other things. It's totally negotiable. That's the thing, is it's totally negotiable. Same thing with seller financing. Like you could just make payments. You don't even have to, have interest on it. But that's a great carrot to give them, is to add some interest on seller financing. They let them be the bank, right? Then they make more money and they save on taxes. Well, they defer taxes mostly, right? So anyways, how do you find private money, right? Is probably a big question. You're like, what the heck, Joanna? Well, who do I talk to about private money? There's several people all around you all the time that are wanting a return on investment of some sort, right? And a lot of people that, like, if you hear them talking about the stock market, that's probably one of the people that you want to talk to. Saying, hey, I have bring a deal. I have a real estate deal. Show them how it works. And then it's insured and secured by a deed of trust. Okay. So they're more likely to lend on it if the money's going to the property and not you. They're not trusting your skills. They're trusting the skills of the house. And what I mean by that is the equity, right? Their money is protected by the equity of the property. Okay. So if anything happens to you, they get the house, right? And they could sell it and get their money back, or they could do the repairs and get even more money back. Like there's multiple ways for them to get their money back. So it's a more secure investment for them. So these could be your friends, family, your inner circle type people. You can go to events and talk about, projects that you have, so that people want to go, hey, I don't have time to do real estate investing, but I do have 100 grand here. Can you put this in a project? And then so long as the numbers make sense, they're all in, right? Like you can't put a they could give you $100,000 and you have a $30,000 property. Like that doesn't make any sense. So the equity is got to be there. You have to, it's a business transaction. Just show them the numbers. They're probably more than willing to be a part of it. You could do marketing regarding it. You could do, just like any business marketing, you can do a direct mail, you could do social media, you could do go to live events, that talk about money or real estate investing, period. There's all kinds of ways to tap into people with money that want something to do with it. They're lost, right? Or even if they're not lost, they're looking for better investments. Maybe they're in the stock market and they're like, I need a better return on investment. I would like to do real estate. Joanna talks about real estate all the time. Let's see what projects she has. Just as an example, right? You can actually look for cash buyers or private lenders, like maybe usually a second on properties. You can get title to pull those. That's, something I could jump on the line and talk to you about if you want. But bear in mind, private money lenders are not professionals. They're just people like you and me, right? You want to be able to be a human to them, human to human. Okay. So the traditional banking, it's all about the application and making the numbers work that fit in their little box. The hard money lenders are like, hey, what's the asset? And then do you kind of fit in the box? Okay, but they have more adjustable products. And then private money lenders are, hey, do the numbers work? You do this? Great. You don't even have to have experience in real estate investing to work with a private money lender. So this one guy was just always talking about here, he's trying to get qualified. He's trying to do a deal and he keeps doing this property and that property and blah, blah, blah. And he just kept talking about his situation, right? And this one guy said, well, I have 200 grand. Maybe we could work together, right? This is really how it happens. The more you're speaking real estate, the more you're out there talking about deals. That's why I say get a deal and present it when you're interviewing these money lenders. Get an Excel spreadsheet. I have one that has traditional, well, actually, it's 3 banks on there that I've tried to do for a commercial loan, but that was it, right? It's mostly hard money lenders and private money lenders, right? I have their website, their products, their name, their number. And so when I have a particular type of project, I go, who does purchase plus rehab? I've got like 10 of those guys. I'll give them a buzz for this particular project, right? So hopefully you guys tracked with me. I hope this has been helpful. Sometimes you can do a combination of them. You can even pull private money lenders together, right? So you could get an LLC and put multiple lenders together, like cap it out at like 10. You don't want a whole bunch of people in there. Plus there's SEC laws that you need to follow once you get past a certain number. So keep it under 10 people. But usually most investors are like 3 to 5. And they bring people in with like 25 or 50,000. They pull it together in an LLC and they use that to lend on a property, right? So there's so many different ways to do this. I would love to jump on a call and help you maximize this if you need more help in this direction, because it is a boatload of information. And you can do, my property I did in Atlanta was a combination of these, right? Private and hard money. So I have I work with seller financing, private money lenders, hard money lenders, and commercial, right? Because I do have commercial, and I'm working on 38 units in Montana, in Yellowstone, where we're doing a PPM that's securing people to the property. And that's a $50,000 buy-in, right? So you have to have minimum of 50,000 to play in that arena. And you don't even have to be accredited on this one. We're doing non-accredited. So there's all kinds of ways to get in the game if you're looking to be a private money lender, and then also to look for private money lenders, how to create the game for them so that they'll want to play with you. I hope this has been helpful. Let me know you got value down below, and have a happy new year. I look forward to seeing you guys in the next training. Bye.